us narrowing it down, especially this week, the developments, especially when it comes to policy decisions. There were meetings held by various central banks, including Ghana, Nigeria, as well as Kenya. And what we saw was each of those countries holding their monetary policy. We have Nigeria holding it at 13.5%. They cut it the last time that they met. Ghana held it at about 16%, and Kenya as well held the rate at 9%. I think the whole worldwide notion is the fact that we're seeing rates easing. There's a lot of pressure for the Fed to cut the rates, and we've seen sort of most of the countries adapt that policy due to various reasons. One could be a slowdown in global growth, as we've seen. But also internally, you're seeing some of the countries taking measures. For example, if you look at Kenya, where it is at, inflation still remains within the band. It still remains, you can say, fairly muted, and there are not too much pressures to pick up inflation. And again, our rate is tied to lending.
So that's another factor which sort of skews the way the central bank might think about rates, because its hands are somewhat tied in the sense that the normal monetary policy mechanism through which rates are, or rather rate choices are transformed into actual growth and other factors in the real economy is somewhat distorted by that. Yeah, it's true.
Very true. And I think looking at, even if we're touching on Nigeria and what that impact is, they've held it at 13.5. They cut it the last time around. And what we're seeing is we've seen them become more aggressive, especially towards bank, and adapting very, I can say, different view of how to regulate and go about legislating banks. And what we saw is them telling the banks that they have to increase the loan to deposit ratio to about 60% levels. And what they're saying is also reducing interest rates for some of the banks which are holding about 5 billion naira. If you're holding about 5 billion naira with some of these banks, with the central bank, then you don't receive any interest on it. And the what was guided by the central bank governor in Nigeria was the fact that they'll await to see what these policies that they've put in place will yield, and if nothing happens, then they're willing to cut. But now they're very keen to see, okay, let's see if the banks will start lending, because if they start lending, will increase money supply, which will push consumer demand and possibly lead to a stronger growth rate within the country.
Yes. They've had quite a few years of very low private sector credit growth, primarily because of concerns around the performance of the economy. And growth has remained fairly low over the last couple of years. So banks are not really that enthusiastic to lend because they might not receive their funds back. So I think the central bank is trying to push banks to lend, like you're saying.
And just touching on Ghana as well, we did see them cut the rate earlier in the year, and we saw the CD get hammered, lack of a better word. Got hammered.
It really lost quite a bit of value within a fairly short period of time.
But I think what they're saying, or what central bank they're saying, the only worry right now is the fact that IMF came off. Again, they were another country that was on an IMF program. But now what they were concerned is the fiscal consolidation push has slowed down. So they're saying spending pick up a bit. So that's a bit worrying. But again, they are slightly confident in the currency. The currency has at least since the second quarter stabilized to some extent. Whether that will be expand or not, we're not quite certain. But I think for them, they might look to ease, perhaps maybe towards the fourth quarter of the year. But that will depend on whether we see some movement or some push in regard to inflation, but again, inflation remains well anchored.
Yeah, it does. I think turning to Kenya, we talked about the central bank a bit. There's been a push by the central bank to enhance regulation of some of these lenders, which are not exactly banks, primarily the mobile lenders and microfinance companies. I think where they're coming from is they perceive the rates being charged as a bit too high by some of these lenders, primarily the mobile ones, which I think in the mind of the central bank is sort of hurting the end consumer, because most people, okay, not most, a lot of people do not really sit back and ask themselves how much am I actually being charged on this loan. They just rush in, download whatever app it may be. They are offered the loan, they just jump in without really taking a step back. So I think the central bank is trying to sort of protect consumers a bit. They haven't really taken any specific policy moves yet, or any regulations or guidelines. They haven't issued any of those yet, but the tone in the last couple of months has really shifted away from banks so much, and trying to capture some of these entities which are operating in sort of regulatory no man's land, so to speak. So that's something that could develop significantly in the coming months.
Yeah, and I think just maybe finally touching on, I think the biggest news that has come out in Kenya this week, the corruption scandal that or the corruption case that is building up against the former minister of the treasury, that is Henry Rotich, and we did see himself, the permanent secretary, as well as 24 others get arrested due to corruption claims, especially when it came to the construction of a dam. There was the allegation that is being placed at the moment is regard to overinflation or overinflated costs, and non-performance as well in regard to the building of those two dams. And I think it's something that's surprising, especially when you see the docket that the minister, the high docket, and also I think creates some worries to investors in the fact that not just maybe a month or 2 months ago they were raising debt, and they were doing roadshows to raise about over 2 billion in the Eurobond, and they also got some debt. The treasury directly got debt from the World Bank, but the reaction hasn't been as drastic as especially when you look at the Eurobonds. They haven't moved significantly. They moved maybe about 0.4, 0.5% earlier on, maybe around Tuesday, Wednesday, when the former minister or former cabinet secretary was arrested. However, I think in the long run, it touches again what you mentioned in regard to policy direction, where the policy direction will be, especially when it comes to Rotich, who was pushing largely to reduction of the fiscal deficit, as well as the Treasury pushing for the removal of the interest rate cut. So whether that will be taken up by the interim cabinet secretary is something to watch out.
Thank you for being with us today and watching the watch list. Today we've covered Egypt's IMF program, the passing of the president of Tunisia, central bank policy choices within the African continent, the initiatives the Central Bank of Kenya is taking to enhance credit growth and regulate some previously unregulated lenders, as well as the developments within the Treasury Ministry within Kenya. If there's anything you'd like us to cover, feel free to reach out to us. And thank you for catching us once again.